Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, November 27th, Monday. We are starting the week after Thanksgiving, after all the tricks that they did, basically for nothing, because we were consolidating all through Wednesday and Friday. Now we are starting the week with no news Monday, at least not big news. We got new home sales. They are basically plummeting a bit month over month and also lower on the year over year, 0.679 lower than the consensus. Fed manufacturing index also coming a little bit lower than the previous one, but also in the negative deeply. The 2-year note action came lower than the previous one. So interest rates on the mid to long term are starting to go lower. And that's pretty interesting because at least we have to watch if the high yields for longer are coming for the 10, the 5, the 2, the 20, the 30 years yield, because that would mean that we are going to enter a recession. So be really careful with these actions, at least the time in which they are performed, because the market, as we've seen in the past, can be quite volatile during those times. But honestly, until tomorrow we have house price, consumer confidence, nothing really super big. A couple of Feds talking for tomorrow, Goldsby, Waller, Bowman. And on Wednesday, we have GDP growth estimate. Remember that this is an estimate. And on Thursday, we have the big PCE. So everyone will be watching on Thursday the market, but until then, we will be consolidating, we'll be going lower for a push, we will be pushing already to see if we break out. We have to apply patience, as always. In terms of interest rates, there's no change in the FedWatch tool. We are still here. No interest rate hike for 2023 anymore. And we are starting to cut rates in May next year. For how much? 1, 2, 3, basically 4 times 25 basis points is 100 basis points on 1% from 525 to 425. So no change. And let's going to see the charts because we are going to start with the 4-hour. Let's see bigger time frames to see the context, because that context is going to provide you with a little bit of edge in order to see how the market makers are going to move the price at big extremes. As you can see, we have 1, 2, and 3, basically 3 tops, higher, and higher, and this is forming a channel which we already broke down in pre-market. These kind of tops, basically doing this kind of thing, usually means that we are running out of steam. We are starting to curve down, to consolidate, and most probably, due to the big move that we got, we are going to revisit, sorry about that zoom, we are going to revisit the gaps that we left behind. That's why I would like to start with the 4-hour chart and the 1-hour fair value gaps, because let's go to the 1-hour. We got this fair value gap that we hold on the 1-hour and these relatively equal lows that we swept during pre-market today. Once we swept that and we started going higher, I was quite bullish on the day. My target, this buy side liquidity at 16,070, that we are almost there. We are almost there. Notice basically this kind of setup overall quite choppy. Look at this move. These moves are nasty, but overall the trend is a little bit higher. Amazon is pulling and pushing the market up due to some numbers, estimate numbers, preliminary numbers that Black Friday it's being really nice in terms of consumer spending. So Amazon is pushing, Nvidia is somehow pushing, quite volatile, but small caps and overall banks are not in the mood. So be really careful, because these kind of things pushing towards the high, it's putting a lot of pressure in the extremes. This is the fair value gap at 16,071 that I'm watching. I am long one contract, and I've been waiting with that contract for basically since the open. If we check the 15-minute chart, we can see this entry that I got. I had an entry, I think it was 73 or something like that, 15,973, which is a really tight stop, basically 5 or 7 points below that pivot. If we don't bounce off here, we are going to revisit that, but we already did the sell side liquidity swipe. So I was looking forward to catch that knife with a tight stop, managing my risk. If that works, I will let it ride towards this buy side liquidity up here. There's also some liquidity up here and also up here. I don't know if we are going to reach that, but my target is going to be this for, I think it's almost 100 points. That's really a good trade for me. I don't want to risk it more than that. And it's quite a choppy day, and we have the entire week ahead of us. So don't be super aggressive on Mondays. We are coming off from Thanksgiving, from holiday. Let the market start tuning in, start giving you some information. And my information is that it wants to go a little bit higher for now. But look at these sellers. These moves are quite nasty. So be really careful. We swept this low. That's what gave me the confidence to take along towards the other side of the liquidity. We have two liquidities up here, so that is set up. I have my profit stop. Let me check. At 50. Here I have my stop. We might bounce also, but I want to lock in profit. That would be a 75 point, no more, 80 something point with one contract. That's 1600. That's more than enough for a day of this choppy. And I've been holding this trade for hours. We are approaching noon, and if you didn't take profits, I highly recommend you to just put it some stops. We have already some nice levels that you can manage your risk of, and it will be your fault if you come to break even on a nice trade holding for hours and you don't take profits. So trust me, take those profits and wait for, I think it will be better setups along the week. That's in terms of Nasdaq. We covered Amazon strength today, 1.37. It's honestly everything gapping up, holding pretty decent, but as you can see, we are starting to see some weakness. Dollar doesn't know what to do. We are pushing higher, another reason to take those gains. Russell is also it did a V reversal, and it's been consolidating for 2.5 hours. So we don't have an edge. We don't have anything that supports a move higher. So the smart thing to do is just lock those gains and wait for better opportunities, most probably tomorrow. And tomorrow, as I was saying, let's review those numbers real quick. Tomorrow, we have the home price and consumer confidence almost at open. So we have a lot of information after the open. We have pre-market to evaluate and assess today's close print. So just don't be in a rush to continue trading. We are coming off a holiday. Just let the market tell you what it wants to do. Right now it wants to go higher, but it's super choppy. You had your opportunity in, I would say, one or two pretty good. This was a really nice entry, 2 swipes, towards liquidity. This was early pre-market, so if you were not on your desk, at your desk, you had missed the trade. But overall, pre-market was quite bullish. Into the open was a little bit of manipulation. You could have taken this swipe. That's what I did. And basically, you just let it run. Don't let the market chop you out in these days in which it wants to go higher, but there's a lot of selling pressure. But if you have not enough experience trading this choppy, mostly range bound market after holidays, just wait for better opportunities that I'm sure there will be enough of them throughout all the week. Thursday PCE would be one of them. So take those gains, enjoy the rest of the day, and I think our best opportunity for a nice trade will be most probably tomorrow. So stay safe, everyone, and remember that if you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one every single day for market forecast, market updates, and market recaps. I hope you had an amazing Thanksgiving Day. Remember that during all these days, the manipulation goes through the roof due to lack of volume. Now we are seeing volume, but we need more time to see what the market wants to do. So let the market show you what it wants to do and follow your analysis. My analysis, I will be sharing that analysis as every day in this channel. So if you like what you see, just follow me and I will be more than grateful for your likes, for your subscribes, and also I'm willing to share my understanding of this market and also what I found useful on fundamental and technical analysis. So thank you for your support. Remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.